Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Thursday, June 2nd, 2022. It is 10:09 Eastern Time as I'm starting the video, and what I'll do in this one is just kind of touch on the things I like right now where I think opportunities lie. And that'll start with an update on the equity markets, and then I want to talk on natural gas, crude oil, gold, silver, really the precious metals, euro, US dollar. And finally, I'm going to end the video with an overview of the energy sector. Kind of in a nutshell, here it is. I prefer right now long equities, and I'm going to explain that when I get into this. Long equities, long gold, silver, short the dollar, bearish the dollar, long the euro. Short natural gas still, despite where we're at right now. I'll get to that in a second. Crude oil short and energy sector short. So I think that's, and I'm just started today in longer term accounts layering into, I'm going to start layering into the energy sector shorts. So I'm going to show you that real quick. We'll get to that towards the end. All right, equity markets, just kind of in a nutshell, nothing much has changed, bigger picture, so I'm not going to spend a lot of time here. We put in a divergent low recently. Remember, last couple days we've seen some weakness, and that is 110% perfectly normal. Nothing goes up forever. This is all we've had so far is an initial leg up in some consolidation, which is perfectly normal, and we're still well within my target range. We still are taking, on this daily chart, we're still taking the shape of a potential bull flag continuation pattern. We'll see if that breaks out as such. Again, you have an impulsive thrust up off the lows, the breakout of the wedge, the downtrend line, a little consolidation on declining volume, which is what you want to see on a bull flag continuation pattern, and that could send us give us another leg higher. So that's that. Nothing really else to add to it. I've given you pullback target ranges on NQ. I laid that out initially the other day. It started here at 12, 527.45, and then I added an upper limit to that range. It increased it a little higher, 12, 595. We're still flirting with that zone. When you have two support levels in close proximity, I refer to it as a support zone. And then still I have a max pullback target here of about 12. 350. So it's fine with me if the market wants to go down there. Now, anything much more than that, I'm not going to be crazy about it. And really, if there is a line in the sand, I really hate to use that term because that's often not. Things aren't always black and white. One level you're bullish, one you're bearish, but really a back test of the trend line and that hard buy breakout level we had last week or so, whenever that was, at 1285. So that's the kind of the bigger picture there. And so if that's it, takes patience during some consolidation correction. Remember, this was a strong move. Market needs to digest those gains. So what's happened today? Let's talk on that real quick. Microsoft knocked the futures down this morning. They came out, and Microsoft randomly, it's not earnings or anything. It's not their quarterly earnings report, but they came out between, which companies sometimes do, not always. Usually they give guidance during the earnings report. They cut their earnings and revenue guidance, citing foreign exchange. It says Microsoft cut sales and earnings guidance for the first quarter, citing an impact of foreign exchange rates as a stronger U.S. dollar takes a toll. So let's talk on that real quick. I know this might seem tangential, but it's part of the whole market analysis. So let's talk now. We can look at USDLR. We can look at the dollar index, but I like to use the euro US dollar chart as my proxy for really trading the dollar. Remember, the euro is the biggest component of the dollar, so it's almost just an inverse of the dollar. It'll move up and down. It's 57% weighting, more than half of the dollar, nearly 2/3 of the dollar index. So, and to me, as I've mentioned recently, I think the euro put in a major bottom, meaning the dollar a major top. This is long-term support here in the euro-US dollar pair. It's a weekly chart. When we hit that level and we're oversold, each time you had a nice bounce, at least a tradable bounce. This time you put in a divergent low and you had even a bigger bounce. And so that's it. We hit this top of the range there. We just hit that the bottom of the range. We're coming off oversold readings, and if you look closely here, you're about to make a bullish crossover. Any more upside will make a bullish crossover on the PPO weekly chart. Well, what does that mean? Well, let's pull that up. Let's look at the PPO histogram, because that'll show you when the lines cross. And so let's just analyze when we were down at this level, and you have these what I call hills. You had a big red hill, meaning the PPO was in bearish territory. PPO line was below the signal line. Then right here you had a bullish crossover. That's where the histogram flipped green, and that was that. And you get a nice rally that lasted months. Remember, this is a weekly chart. So each of these, this is a quarter, 2 quarters, or half a year, 3 quarters, a whole year right there. So that's a pretty good and fairly long bounce there. We go back to this point. We were down at the support zone, got our bullish crossover right there, went to a green, and that was it right there. We were down here, we had a bullish crossover there, and here we are. We're about to get one. So no guarantees. Sometimes you come back down. There's and you could break this long-term support. But to kind of get a better feel in the near term, you zoom down to the daily chart, and this shows you the euro just recently, euro-US dollar pair, I should say, broke out here, ran up, hit that resistance level, had a pullback, and go down even shorter term to the 60-minute chart, which I just covered yesterday. You had the bigger, which is more significant, larger bullish falling wedge with prices hitting that long-term support here. You had a breakout, which is quite bullish, and nothing, again, just like the stock market, nothing goes up forever. You set up with a smaller bearish rising wedge right there. You had a breakdown, and as I covered yesterday, the measured target is the widest part of the wedge, which is right there, and that was also support. That's what we hit, and I told you yesterday I was buying the euro there, and also adding to gold silver, because that's gold and silver are going to move in line with the euro and US dollar. So just look at GLD, and you can see GLD mirrors the euro US dollar chart up today, as is silver, SLV. And that's that. So that's where I think the opportunities lie. It's not a heavy all-in moment for me in the precious metals, but I think, to me, everything, and that's why I do this video, and that's why I'm covering multiple trade ideas here, it's all about diversification. This is your portfolio, whether you are an long-term investor or an active trader. Some people might only trade gold, or might only trade natural gas or Bitcoin, or whatever the thing is. I like to spread my bets, because the only guarantee I've ever given anyone on this site is I will be wrong. I will be wrong a lot. And the thing is, I don't want to put all my eggs in one basket and be wrong and suffer big losses. So I spread it out. You got precious metals, a little Bitcoin right now. I'll get to in a minute, natural gas and crude oil. I'm starting to short those now. Also the energy stocks, which is kind of related. Energy is all going to go together roughly. Of course, equities. So, bullish and long there, and so forth. And you can subdivide. So as far as just to loop back to where I was, I still favor, here's what I favor in the equity markets: long and bullish, with a overweighting towards technology. So you can go with QQQ, something like that. Still looking for a move up to at least T4, and which is now, I'm going to start calling this T5, potential up there. We'll see. First things first. So I'll just put this as potential. And I'll let you know if I think I will extend it to an official target. So that's a potential target up there, T5, around 329.60, right? And if wrong, I already gave you where I start to second guess my intermediate term bullish outlook, and that's if there's a gap back here, support, everything I just covered on NQ as well. All right, so one way, if you want to keep things simple, I've laid out some individual stock trade ideas recently, such as Amazon and Zoom and NVIDIA, things like that. But if you want to keep it simple and trade ETFs, there's nothing wrong with that. They're sector ETFs. Again, I'm overweighting right now tech. And this looks just like QQQ. You have an impulsive move up, i.e. maybe a potential bull flag, or a bull flag, the flagpole of a bull flag if it breaks out, and that's XLK. So consolidating at the first resistance level, exactly where it should have. That's big resistance right there, about 141. It's consolidating around there. If it can pop that, probably run up to the next level. give or take. That's not a hard resistance level. It's kind of, we've traded through there quite a bit. I'm going to move that line down a hair, somewhere in there. Anywho, that would, I still think there's more upside there based on the technicals. And then semis, remember we were short semis on the way down, and semis are just a subsector of tech. So that's where, again, as far as equities go, I think the opportunities lie. This is SOXX, a semiconductor ETF. Might want to make a run for the 200s. And if it craps out like anything else, that's it. You know, it's already been a nice trade off the recent lows. You got a big gap right here that buyers, well, they've already stepped in once on the near gap backfill. And so, you know, you can set relatively tight stops. Remember, we are in a bear market, so these divergences, which are a big part of, but not all, of my analysis, may or may not play out. But if they do, they could play out for quite a move. You know, I could see the semis potentially going, you know, all the way up to 477 right there. And that's, you know, if so, that's another 13 or so percent. There's the 200 days. There's certainly some resistance levels before that. Okay, so that's it. So as far as equities go, I think right now, you know, still at this point in time, long with a weighting towards the tech sector. And then why don't we get to energy now, and then I'll do gold and silver and all that at the end there. XLE. Okay, so I've covered this recently. XLE put in a bearish engulfing candle. XLE is the energy sector ETF, the big one, the main one, which has it's mostly made up of Exxon and Chevron. And they put in a bearish engulfing candle the other day. You have a trend line here that's still holding for now. We can move that like that. So if you want to play it safe, you wait for a break of that. Big divergence is forming. So I'm looking at a nice trend short. I think, again, you know, if I had to throw away the key, you know, and lock it, you know, take a position, this one I think you could hold for, I think it's going to be many months. I think this has been a very crowded trade. Just like, think back 6 months ago when I harped on and harped on and harped on up to the end of the year and even after the beginning of the year, tech in the fangs. I talked about it being a crowded trade, and what happens when a trade becomes crowded. Everybody loved Amazon and Apple and Facebook and Microsoft, couldn't get enough, and then one by one, those were taken out to the woodshed. They were taken out back, tied to the post, and shot, blindfolded and shot. And then because there were when everybody's bullish and everybody owns a stock, every fund manager, every individual investor, there's nobody left to buy it. And when they're top heavy in that, and then things start going the other way, and everybody sells, that's what a crowded rush to the exit looks like. Amazon, Facebook, I don't have to pull those charts. You guys know what they look like. Now, this is a crowded rush for this is a crowded trade. Far from a rush to the exits, yet it's still going up. You know, I'm talking thing hit a, you know, multi-year high just the other day. So again, that's what I do. I try to pick tops and bottoms. You don't get them all, and the thing is, you don't get married to it. You short it here, or you wait for a breakdown, and you keep your stop somewhat above. And if I miss this one, I might be talking about it 2 months from now for the next short entry. But we've already shorted it really. You know, officially, it was an entry there. First target was hit here. This is a marginal new high. You know, I still maintain this third target zone down here, the top of which is at 59.46. Let me just try to quantify that for you. On a pure play short on XLE, you're talking about a 32.5% drop from where we are today, if I am correct on that one. I'm going to go through the big top components. ExxonMobil, again, if these two stocks break, the whole sector breaks. I've never seen these guys break, you know, and put in a top, just because they're big oil, and they're integrated oil companies. They do it all. And I'll get to the other niche companies in a second, but there it is, your bearish engulfing candle on ExxonMobil with a follow-up candle. Not red, but so far red today. We need to take it out. So here's the thing: when you trade a bearish engulfing candle, if you're not familiar, look it up. It's a potential topping stick, and it's super simple to trade. If you get one, you can short there, or you can wait for a follow through and the break to the downside. But the thing is, it's supposed to be inherently a potential topping stick. So the risk reward to me is amazing. I love these. I'll take these shots all day long, even if each one doesn't pan out, and they won't. They all won't pan out. But you short here, you have a stop above the top of that candle, maybe on a closing basis if you want to just give it a little bit of room. And then, so what is that? You're talking about 3%. You lose 3% to potentially make my first swing target. I'll have to sharpen my pencil on that other levels. I haven't done that. First stop would be 89.42. Then this trend line here, and ultimately I see ExxonMobil coming back here to 66.34. So to risk a 3% loss for a potential 32% gain, you're talking about a 10-to-1 risk reward ratio. It doesn't get any better than that. Now, it's a contrarian trade. So here's the way I analyze trades. Obviously, I'm very analytical. That's why I do what I do. So there's two components really to keep it simple in a trade. There is the risk reward ratio, but there's also the probability of success. So what this is an extremely counter trend trade right now. Energy stocks have been in a strong uptrend. Look for tops on them before that still haven't come, and they may continue to go up. Right? There's a lot of fundamental headwinds, or I'm sorry, tailwinds for the energy sector right now, especially since Russia invaded Ukraine. So that's that. But what I do is I'll wait. So let's say the probability of success of this trade is lower. So that's going to rate that trade down for me a little bit. But yet then I look at that risk reward ratio 10-to-1, and that's outstanding. So I will take, and it's usually going to be that too when you have those outstanding risk reward ratios that are better than average. I like usually at least a 3-to-1 RR. So I just want to let you know that's how I tick. That's how I think. And so again, it's not an all-in moment because again, we're right off the top. We don't even have solid sell signals or evidence of a trend reversal yet. A potential, but not solid. So therefore, I'm starting to scale into shorts in this sector now. CVX, Chevron, again, bearish engulfing candlestick following through to the downside today. Little minor trend line here. You can set a price alert on that. And pretty thin. When I say thin, I'm talking about the volume price histogram. You can't see it, but the volume at price histogram is right here, and it tells me that you got a lot of people that bought here. This shows you the volume at this price, and it's thin below that all the way to down here where this box is. And so these thin zones work a lot like a gap because they're very similar. There were very few trades there. This is where a lot of support is on the volume price histogram. So this one can fall pretty fast once the tide turns. And again, it's a crowded trade. So let's just say, I know the Saudis today came out, or the OPEC came out, said they're going to pump more gas. Doesn't have much of an effect. Oh, and by the way, in 3 minutes now, you're going to see the, what is it? Let's see, one of the two, natural gas first and then crude oil at 11. Here we go. This is on the, you can get this on the resources page on the right side of the chart, economic calendar. And here we are at 10:30, natural gas, and 11 a.m. crude. So we're going to see some volatility there. So let me get back to those charts. All right, I don't want to beat a dead horse, but I will go through some of the other top components of the XLE here for you real quick, and then we'll move on. Let me just turn these lines back down. They make the chart a little cluttered. All right, this is EOG, and you're going to see the same thing. I haven't updated all these charts, but birds of a feather flock together. These are all big energy, big oil, and there it is. There's your major uptrend line right there. When that trend line's broken, you can tuck away, again, with stops in place. When I say tuck away, I'm saying it's a entry on a longer term swing short. So you have a minor trend line right there, which is now broken. That's why I think today is the day, and that's why I'm starting to buy these energy shorts. I'll give you those ETFs in a second if you want to use the ETFs. And then this trend line. So here, I think it'll be something like this. Come on down, have a reaction on the trend line, ultimately break the trend line. That'll be your next sell signal. Active trader could cover there. Depends. I wouldn't cover EOG there if ExxonMobil and Chevron Texaco or Chevron are breaking down at the same time, have just broken down. It all goes together. So watch all of these and watch the sector ETFs and let that be the guide to how you micromanage. If you do micromanage like me, a swing trade. Micromanage means that's where I will actively game the rips and dips and bounces off support. But the common theme here is look at the divergence, negative divergence, big divergent high. Again, some bearish engulfing sticks on a lot of these little minor trend lines, which are going to trigger the that'll bring short-term traders in, and that'll bring in some selling if and when these are all taken out. And that's the thing. The more of these you see go, the higher the chance you will have of a breakdown sticking on one. In other words, on ExxonMobil, Chevron, if you see the majority of the stocks in this sector break down, and they all have these very similar near-term uptrend lines, divergences, and boom. So you can see support levels, wedges. This is Oxy, OXY. If I'm not mentioning it, I think you can see it. You should be able to see it in the video here. If not, you need to adjust the brightness on your monitor or something. OXY, Occidental. Petroleum, bearish rising wedge, MPC. See, don't have them all marked up. I don't need to because they all look the same. They all, again, birds of a feather, right? Especially in this sector. So there it is, guys. All right, let's not beat a dead horse. Let's talk about how to trade it. XLE, of course, is the one-time main energy sector ETF. You already have my targets there. You can, if you want an ETF, DUG is a two-time short inverse of it, as is ERY. So those are your energy sector. You can see, a bullish falling wedge in ERY. Targets, just align it with the XLE. And then if you want more juice, you have these sort of niche or subsectors in the energy sector. Just like I told you in the beginning of the video, you can go QQQ or XLK and be tech heavy, or you can narrow it down and look at one of the more bullish sectors, which is semiconductors. A subsector of tech. So in energy, you also have the oil and gas exploration and production stocks. And by the way, ExxonMobil and Chevron are in here as a lot of the other ones, but you also have some smaller companies as well. You get more bang for your buck in this one, meaning when my call in the energy sector is right, bullish or bearish, this one will usually outperform either to the upside in a bullish trend or to the downside in a bearish trend. So more juice. Kind of like trading GDX instead of gold. When the price of gold's going up and you're bullish on that, you're going to get more bang for your buck. The miners tend to move more in the same direction. All right, so there's XOP. You can short it, or this one does have a two-time leveraged inverse. It's the same sector, and that's DRIP. Every time it splits on this charting program, they move the lines, but it doesn't matter. Anyways, just that's one idea for you. And then XES is the most juice. In other words, these are the equipment and services stocks within the sector. Same little minor trend line there, same divergent high. This one already topped. See here, we put in divergent high top back there. This little counter trend rally. And I think I mentioned to you the other day a potential head and shoulders topping pattern maybe. And I'll call it down to at least this level here once we have a solid top. And this will be a big level too. You want to look to where you can add to it. Breaks of this one, let's say $67 and then $63. After those two levels go, you're back in this trading range. In other words, this was a breakout to all-time high after multi-year, about a year-long consolidation. So if we fall back in that range, you're probably going to the bottom of that range at minimum, and the bottom of that range is about $46. So you're talking from where we're at today on XES, which to the best of my knowledge does not have a leveraged short ETF, but you're talking about a 42% drop there on that one. Okay, let's talk the energy, the commodities themselves. Here's crude oil. In last night's update, and I gave you, this was a trade ID yesterday with a break on the trend line, and then if you want to do my BOD line right here, you had a support zone which was taken out. We hit my first second target where I told you I expected a bounce yesterday, and what I was a little remiss on doing, I gave you a set of bounce back to this level or this one here, but I should have, of course, mentioned the trend line. There's always that possibility, and that's exactly what we got today. Perfect back test. I've not modified this trend line, so that was a nice shorting up right here on the back test of the trend line. Plus, I had a resistance level there, former support at 116.82. Beautiful entry, still is right now as I'm doing the video, for a swing down to my next target or targets. That's CL crude, but again, it's going to move at 11 o'clock. Natural gas kind of pushing the upper bounds, but I had that inventory report, so I've held on to my short, and that was a little whipsaw stop clear and fake out move. I told you I didn't want to see it get much above that level, but much above, and again right in front of an inventory report, which I always say this, when there's a stock coming up to earnings or a commodity coming up to an inventory report like this, more often than not always, but more often than not, the direction it's going to go is, if the charts are clearly bullish or bearish, they're going to determine which direction it goes. So there it is. You can see the inventory report. We were up here and boom, we got the snot knocked out of it. So obviously there's probably more natural gas floating around in the market right now than folks expected. So it just dropped 4% since I started the video. It's going to get to it anyways, and the timing's good because I want to wait till that inventory report. That's it. So you guys know my targets, and again, the case is made for potential major top, I think, in nat gas. Let me go to a yearly chart here for you. All right, this is a yearly chart with daily candles, and there's a big old rising wedge pattern, divergent high right here, negative divergence. We had DH1 there, big correction. We got that one. We were short on that and fell down. And so this again is a swing target down here, 6,525. So it looks something like this. Probably had a reaction, one more reaction on the trend line, ultimately break it and head down to 6,525-ish, about a 24% drop, if so, in natural gas. And if it goes on, if I'm wrong, we go on and make another marginal new high anytime soon, because the way these indicators are lagging, it's simply going to be another divergent high. And although I may be stopped out, I may be revisiting this as another short out back then, looking for a top. Okay, and last but not least, to loop back to gold and silver, or the dollar, really, euro. Remember the euro, US dollar, and gold, they have a very high correlation. So if again there's at least a tradable bottom here in the euro and a tradable top in the dollar, then we'll probably head up here. There's a nice target on the euro US dollar pair right there. If we get that other thrust up, and if we get a breakout, then even a lot more potential. And again, that should be provide a tailwind for the gold trade. Gold, to recap this, long-term analysis, we had this big symmetrical triangle here on the weekly chart. We had a breakout of it and recently a back test of it. And so what gold needs to do is go on and take out these all-time highs, multi-year highs. This is GLD. This is a weekly chart, long-term. There was a last bull market and gold was back here, peaked and ended there, came up, ran at that high. We've been pushing on it recently. We need to break it out, and it's going to be big for gold if it does, if it can do that. And again, near term, it's so far, as long as it holds, and it has held so far, that triangle pattern. Let me move all this histogram out of the way. You can see, as long as it holds that, now it needs to break about 174. If it does, it'll probably run up and make another run at these highs. And again, long term, if it can break those, and we've tapped it enough times, hopefully it will. Even if it doesn't, I just can't make the case to short it. If it breaks these levels, that's where I think you start exiting any long positions, and especially if it breaks 164.80. Do I short it? Well, we'll see. Let's see what happens. Right now, I still again holding some longs in the in gold and silver, and palladium too. I showed out throughout the other day. Palladium's just kind of not taken off yet, and platinum's, platinum had a run. PL, that's platinum futures. Palladium, if I think if the dollar can get going, it should. There's kind of cross currents here. There's a lot of cross currents, fundamental cross currents. A lot of palladium comes out of Russia. There's that, and it's also the primary, the largest use of palladium and all the platinum metals. Palladium is one of the platinum group of metals. Palladium, rhodium, platinum. They're used in emission control. So car production, we know what's happening. Economy's certainly slowing down. Auto sales were out, I think today, this morning, and they came in well below expectations. So yeah. Anyway, it broke out of the downtrend line, so it's really just kind of stalled out here recently. So I think if it can break above this level, let me give you that line right here, then it might be able to run. As of now, gold and silver, again, I got all three. 2088, so about 2090 it needs a pop. If it pops 2090, I think it'll run up to those potential targets. And if it can really get some traction here, longer term I remain bearish on palladium. It's just more of a shorter term potential swing trade. But again, I already gave you gold and silver, and that's where I'd be overweighted. And the sector, again, it's not an all-in moment, but gold needs to break this about 1871-ish level, should run up to that next target, 1904. Silver, SI, silver futures, or you can trade SLV, the ETF. Let's see. I've got it here somewhere. There it is. SLV or SI. I'm sorry. This was a target I gave you the other day. Target zone up here. Well, target up there. 24,351. Still my intermediate term swing target, which gives us from where I covered it yesterday about 11% rally. Need to take out this previous reaction high right here. And that was also a divergent high, and there you can see we had negative divergence, and it played out as it usually does for a pullback, but a very minor pullback. You can see the buyers stepped in pretty quick. So if we can take out that high, it's going to be pretty bullish, and it's going to show that this positive divergence, or aka bullish divergence, was the more important of the two. All right. And last but not least, we're going to rifle through a handful of coal stocks, because I told you the other day, somebody asked, a couple subscribers asked about this a couple weeks back, and I said they're setting up. They're not ready yet, but they're setting up. And I'm just going to rifle through these real quick. It's one watch list I have with coal stocks, but I'm looking at a lot of them. These are that's a divergent high right there. There's a minor trend line, a lot like the energy sector. I mean, these are part of the energy sector, I should say, but they're not oil and gas. This is coal. But they move together. They're alternative energy sources. A lot of power plants, if they price coal is cheaper, they'll turn around and fire their coal burning, whatever you call it, power generation systems, and some can run on natural gas, coal. Again, it depends on the power plant. Some are nuclear, but even the nuclear plants, time they shut off and they're burning coal. And so that's it. I think coal has been also a crowded trade. It's had a heck of a run. They were highlighted as longs back here and bullish. They put in these big divergent lows. I underestimated how far they'd go. But again, I think the next trade to make on these is to the short side. So I'm going through the sector. You can see the big levels here are some of these trend lines come off the lows. ARLP, really nice. When that trend line goes, it's got a divergent high. A little minor trend line there as well that could bring it down to the trend line. You're talking most likely a trend reversal and a lot of downside in these. Don't underestimate, again, how far they can go in either direction. 994 I think these are the primary swing targets: 1268, 994, and 655. Let me run through these a little quicker so the video doesn't go so long. You can look at, again, I haven't updated each and every one of these charts. And I'll probably do that if you want individual trade ideas. You need to let me know. A lot of people, I know a lot of subscribers on the site prefer ETFs because of their simplicity. You don't have the risks involved if you short an individual stock or go long. Any news-driven event, earnings, anything can really move against you pretty quickly. Whereas ETFs, it's safety in numbers. It's a basket of stocks. It's like a mutual fund, same concept. You have many things in there, but look at that beautiful steep bearish rising wedge with negative divergences. When it cracks, the minimum pullback target first stop is 51.23, which is, that's a quick 15%. And I think it would come down to at least this level. I think it would come down ultimately down here and check that trend line, that uptrend line. And on that'd be a 45% drop. So there's a lot of meat on the bone. And again, the easiest way for me to try to share my thoughts with you on this, I'm either going to be right or wrong that we're probably looking at a top at or near a top in the energy sector. And if right, you're going to get more bang for your buck shorting these coal stocks than you will on a lot of the oil and gas stocks, is my thoughts. But I like to, at the end of the day, diversify and do a little of all. Here, the 592, that's a nice target right there as well on XSC, SunCoke Energy. NRP, look at that minor little trend line wedge here. This is a beautiful setup right there. Got an uptrend line, divergent high right there, negative divergence, and a primary uptrend line. Boom, that would be and it's ready to crack any day now. It's right on the line. Doesn't mean that, it hasn't broken down yet, but just replicate these charts, set price alerts, and then jump in when your alerts start going off, especially multiple alerts, meaning multiple breakdowns. 31% drop or so if it gets there. Well, I jumped over that one. That was a Chinese one. Let me just look at that again. I see a big divergent high there. And you can see, I'm moving my lines. I had divergence before, no clear uptrend line, but this is a target here, this uptrend line right there. That's Yangkong Energy Corp. If I butchered that, I'm sure. But again, it's just been diverging, and then, it's because the oil's been going up, so coal's been going up, and if oil has topped or topped soon, and sometimes these companies will start going down in advance because those in the know, little birdies, meaning the insiders, they know when things are going to turn, and they'll start selling their shares. And so a lot of times the energy stocks themselves will start going down before crude oil tops. All right, guys, over and over, a lot of beautiful setups here. A lot of meat on the bone when these things break, and the takeaway is the majority of these coal stocks I just showed you, the ones with nice uptrend lines or horizontal price support, are right at or above support. So they're ready to crack, but these haven't cracked yet. So it would be premature now to enter that. But here's the thing. If you wait, if these all start breaking down, I get a lot of these alerts going off and they break down, and you wait just a few days, you probably missed the boat, because you're probably going to be halfway down in what I call no man's land, halfway down between the breakdown point or the sell signal and the first price target. I like to get in early. That way I can quantify, have tight stops in case the levels are regained, where if I short in no man's land or buy a stock in no man's land, I like to set my stops strategically, below support or resistance, above or below. All right, let me wrap it up here. You guys know the gist of it. That's it. Those are the things I'm looking at right now. It's not all inclusive, but some of the main things there. Other than, of course, Bitcoin. I should have updated that because I know there's going to be questions. Sorry about that. Bitcoin's backtesting that trend line. Like I said, ideally I would have wanted to see it hold R1. Didn't hold that, but needs to at least hold this trend line here, or because it could walk its way down that 228,575 support. So there's still very much a chance for this Bitcoin trade to pan out. It just needs to ideally again hold these levels. It's backtesting that trend line right there right now, or just backtested it. Kind of a little bear flaggish. Hopefully that doesn't break down right there, because if it does, it's going to take us down below there. And if it does that, remember, this was long-term support I just showed you a couple days ago doing the update on Bitcoin. So if it does it, it's still going to look good down there, and that would just be another entry. So if you want to keep stops tight, you're going to get stopped out, and then we might be buying it back down here again, because that, again, once again, was long-term support. All right, that is it, right on the 37-minute mark. Sorry it went so long, but again, I covered a lot of things in this video, so probably the only one I need to do today unless anything changes. This has been Randy Finney with Right Side of the Chart. Have a great day.